Welcome to Pearson Bryson. My name's Connor. I'm a business analyst. We're going to share what's the difference between standard mileage and actual expense for depreciating your car within 5 years typically. So simply put, what you want to do essentially, if you have a business car or a car that you're putting in your business name, or even if it's in your personal name, you're using it for a business, this year, 2024, the IRS pays standard mileage, 67 cents per every mile that's accrued driving. That's up from 65.5 in 2023. And every year it typically increases. So next year it might be 69 cents, it might be 70 cents, who knows? But the point is, right now it's 67 cents. But whatever, by the time you watch this video, whatever the amount is, you simply want to get whatever this standard mileage rate per the IRS is paying per mile and multiply it by the amount of miles you've used the vehicle for. Standard mileage, you have to pick one or the other. You have to pick standard mileage or actual expense. Actual expense, as it stipulates, is the actual expense of what the cost is to maintain the vehicle. The car insurance, for example, the repairs, the oil changes, etc. Like what you spend for the car and the fashion of business. And based on how many miles you accrue and how many miles you use it for business depends on which one of these you want to use. Most times, it really depends. Every case is different. For example, if someone uses the car, doesn't matter if it's 100%, 50%, whatever the case is, but they put a lot of miles on the car. Maybe they're a trucking company and they go across the state. More than likely, it makes more sense to use the standard mileage. Even though it's a set rate, it has depreciation worked into that. You're getting 67 cents per mile for all the miles you've accrued. The problem, and this comes down to, you have to figure out and talk to your tax person to figure out which one benefits you the most. You can only pick one or the other. Standard mileage is typically for people where you find out and do your research that the miles you've accrued outweigh the amount of expense you've had on the vehicle. So for example, let's say you drove 10,000 miles in 1 year, right? 67 cents, that's $6,700. So $6,700, but let's say you had expenses of maybe $3,000. Maybe you had to pay for oil changes, gas, etc. Maybe say 3,000 for the heck of it. It'll make more sense instead of using the actual expense. You can only take $3,000, but the mileage of 10,000 miles, you could take 6,700. You take the standard mileage, 6,700. You get 3,700 more dollars in actual tax reduction. That's how you do it. Now, let's say if it's opposite. Let's say you spent, let's say $15,000 on expenses, right? Maybe you had to get a new transmission, maybe tires blew out, but you still got 10,000 miles. So you get 6,700. This is paying you 15,000 actual expenses, all your receipts, and this one's paying you 6,700. You get to $15,000. See how it switches? It's really circumstance to circumstance and perspective to perspective. And you keep doing this over 5 years. So that means that's a free, maybe $15,000 tax write-off per year that you're getting, or $6,700 per year. And based on the miles, it's about what outweighs the other one. And that's if it's 100% usage. But say it's only 50%. Now that's 15,000 went to 7,500. And that 6,700 went to what? Just half of that's 3,850. Half of that. So you still went over here with actual expenses. So it really comes down to what benefits you more. Is the vehicle utilized 100%, 50%, and use that whatever percentages based by multiplied by the amount of usage, and that's how you figure out your total. But that's basically the methodology to think about it. But that's about it. Anyways, like, subscribe, share. Welcome to Pearson Bryson, and stay tuned for more videos. Try to keep this nice and short. Peace. Ciao.